Hello world, welcome to the 219th video on my channel where I'm building my own digital assistant named Shane, like Jarvis from the Iron Man movies and comics. Please consider subscribing to my channel, liking this video, and leaving a comment letting me know how much you love doing taxes. In the previous video, which you can watch here, we built a small, kind of compact, basic tax estimator. And that's more for people who just have basic taxes, just to get a rough estimate, and doesn't follow a long common tax form. So in this video, we're going to do a deeper dive into just taxes in general and have more of an intermediate level program. So while the Python code is relatively simple, the tax, I guess, depth that we're going to go into for the US tax system is a little more. And so I do recommend that you have an intermediate level understanding of taxes to follow along with this. And then I just added a bunch of print statements that semi follow along with this so you can kind of compare and contrast. So in this video, we're going to take a example of someone who makes $100,000 a year, and they are married filing jointly. And so this is a 1040 form for those familiar with the US tax system. And basically it kind of goes down to the income, then you subtract the standard deduction, you finally get your taxable income, then you apply the tax here, and then how much you owe. And so we're going to kind of mirror that in our code. So we're going to put the function on top, and if you're not familiar with PyCharm or other IDEs, these are just special kind of comments that let you know, the coder, what you want to do. And so for right now, the first thing is we have a function where we pass it the income, which we'll show you later how that's calculated. And then you calculate the federal tax. Ignore this comment. This is just copy and pasted. I actually have the 2023 tax brackets here. And so for the first $22,000 you make, you'll be taxed at 10%. $89,000 all the way up to, or $22,001 to $89,450, you get taxed at 12, so on and so forth, known as the progressive tax system. And in 2023, anything more than $693,750 is taxed at 37, which is the US's top tax bracket. And then we start off by claiming tax and the previous bracket limit at 0. And then, like I explained in the previous video, this code has not changed. It goes through the bracket limit and rate. And then it says if the income's greater, you go to the next bracket limit, and it keeps tracking the tax and the rate for each one, and then returns the tax. All right, so that's how we iterate through the US's progressive tax system. Now this is where we start getting into the code that matches the 1040. So the first thing we're going to do is kind of tackle our W-2 job, so the job income. So 100,000 divided by, I use 26 because I work at a IT corporation and we get 26 paychecks. So 26 pay periods in a year. And so I did 100,000 divided by that 3,008 is $3,846.16. And so you could do this by when you get your W-2s from your employer, and you just divide it by 26. And on this is kind of the total amount from the W-2s right here. And then on my paycheck, it's approximately 16%. I'm not sure how employers calculate that for you. I know there's some sort of calculation that they do. And so the job taxes paid, again, I just took a W-2, divided it by 26. The taxable interest is next, so we're going to skip these, but if you have these other income, you need to list them, and you could just do a variable here, saying like Medicaid waiver, something like Medicaid waiver payments, right, which is a type of income, equals 0. and I'll show you where to plug that in, but let's just say you're just a normal W-2 employee. So now we're to the taxable interest right now, lines 2A and 2B. Let's assume you don't have any tax exempt interest, like a municipal bond fund. And so that, let's just say you made $100 of taxable interest in your high yield savings account. And so I keep track of all the passive income I get. So this number, I can get this number for real throughout the year and have it live. The dividend income is next. So qualified dividends and ordinary dividends. If you don't know the difference between the two, just go with ordinary. That way you have a higher taxable income. And when the reality comes, then you'll owe less than you thought, or get back less than you thought. And so we just put $1,000 for some easy math here for dividend income. In the advanced version that I'm going to create, the one I'm actually going to use for myself, I can download from my brokerage, Fidelity, what my actual ordinary dividends are. And I built a dividend tracker as well that gives me my estimated dividends. So if I'm looking at 2023, I can go into Fidelity right now, even before I get my 1099 dividend form, and find out how much is qualified. And then in 2024, throughout the year, I can have a real live estimate so I can adjust my taxes. So the next on the on the 1040 is IRA distributions. I don't have that, but if you are of the age where you're supposed to do required minimum distributions, you need to list that here. And again, you'll have to add a variable here. Pensions and annuities. So I'm retired military. So I do have retirement income, but if let's say you made $50,000 a year in a pension, divide that by 12, because that's how my military retirement does. You have to pay taxes on that in the US, so divide that by 12 as well. Capital gains. Social Security benefits. If you get Social Security, again, if you're of that age, you're probably taking IRA distributions. I didn't list that yet. I'm not of that age. Lump sum, let's skip that. Capital gains, so when you sell stock, long term or short term, I just lumped it together. Again, my Fidelity keeps track of this for me. And so I just enter in the capital gains. So let's say this person had about $1,000 in capital gains. Business income. So then all your Schedule 1s, this is where it'll lump all your Schedule 1s together. So if you have small businesses and side hustles, you can put that total here. This fictional person does not. Let's say if they have a YouTube channel, those might come in other Schedule 1s, like a 1099 MISC or a 1099 NEC, non-employee compensation. And then we're going to add those together, so you can either combine it or make another variable and then add it to this for other income. And that's this line right here, additional income. So then what we do, I'm sorry, I should have left it on there, is you add lines 1Z, which is all of these right here, 2B, 3B, taxable interest, ordinary dividends, taxable IRA, etc. 7 and 8, which is your capital gains, and this is your total income. So it's literally total income, which is my job income times 26, taxable interest, dividend income, retirement income times 12 for me. That means a new line. Other income and capital gains. And that gives you your total income. If you are self-employed, you get a small deduction. So self-employment deduction right here goes adjustments to income, Schedule 1, line 26. For me, there's a bunch of other things you'll get, but for me, that is a self-employment deduction. So AGI is the next line, which is your adjusted gross income. This is kind of a very important line here because you use this on a lot of financial aid documents, your adjusted gross income or your adjustable gross income. So I just said AGI equals total income minus self-employment deduction. Now in 2023, the standard deduction for married filing jointly was $27,700. And then also if you have qualifying businesses, you'll get a deduction of that as well. So your actual standard deduction, which you'll see here, is the standard deduction, or if you itemize, which is outside the scope of this code that I'm showing you now, and it's more for wealthier people or self-employed people whose jobs are almost like their life. Right now, the standard deduction for 2024 is, I think, $29,000, and somebody of my income is not going to have itemized deductions above $29,000, so I didn't even code that. You add this qualified business income deduction, and then that is your total, right here, this line 14 is your total deductions, which I have here, the actual standard deduction, which is this standard deduction plus this qualified business deduction. And then your taxable income, right, what the federal government considers the income that you're going to get taxed on, which is this line 15, comes here, which is AGI minus your actual standard deduction. So what it's doing is AGI minus actual standard deduction, which is these two combined. And this gives you your tax, or your taxable income. And now we're going to put it into that function I explained before to get this right here, line 16 on page 2, which is your tax. See instructions. So if you can go to the instructions and you'll see it's basically what I did was created a function off of these instructions. And so what it's going to do, it's going to calculate the tax, and that is basically your tax. Now, if you have kids, I think the child tax credit is $2,000 now per kid. So my kids are older, and so I don't have that anymore. I have a mutual fund that has some foreign governments in there, some foreign stocks. And when I get paid that foreign stocks, Fidelity has to pay, or I have to pay foreign taxes on that. And as a U.S. citizen, I get to get a credit for that. And then self-employment tax, you get taxed for being self-employed. I'm going to keep my comments to myself because it's YouTube, but that's whack. And so your total tax credit is your child tax credit, right, which is going to lower your tax, plus foreign tax credit, which lowers your tax, minus your self-employment tax, which adds to your tax. So your total tax, which is all the way down here, is the tax minus your total tax credit. And then your total taxes paid, remember we calculated that, or we had that, the job taxes paid and retirement taxes paid. And so if you did estimated taxes throughout the year that's not on your W-2 or not on your retirement, I'm not sure how you could do that. I don't know if you could pay the IRS directly. I think you have to do it through your job. But you would add that here after putting a variable. So I've been having difficulty calculating my taxes once I retired from the military and have a civilian job and have a small business, have my YouTube channel. And so I have been assessed an estimated tax penalty each year. And so I'm hoping 2024 is my first, or 2023 is my first year I avoided it. But as you can see, I'm sorry, where is it? Oh, here we go. This estimated tax penalty, instead of putting it at the end, I put it on top of it so you can get what you truly owe. And then the amount you owe is going to be your total taxes minus the taxes you've already paid plus an estimated tax penalty. So if you were using this code, you would look at your 2022 taxes and see if you paid a tax penalty. If you didn't make any significant changes, you might have another penalty in 2023, so maybe you can just add that there. But we're going to add 0 because somebody making 100K with no small business or YouTube is unlikely to have to owe estimated tax penalty. Ignore this Louisiana state tax. This was just my WAG, which is a wild guess. But I do want to create a program that helps me with my Louisiana state taxes. Over the last 3 years since I've been retired, it's averaged out 25%. But again, that's so wild of a guess that I'm not sure why I even have this. And then I created a bunch of print lines so we can go it together. So just a quick recap. This fictional person makes $100,000 in W-2 income. Doesn't have any pensions. Has some taxable interest and capital gains and dividends. And that's about it. So this is like a real life person, married. And so let's look at all these print statements. All right. And so I kind of made it look similar to what the 1040 looks like. So line 1A, for example, is, let me go back up, total amount from W-2s, total amount of income from 20 W-2s, $100,000. This person had about $100 in taxable interest, $1,000 in dividends, $0 for pensions, $1,000 for capital gains. This person doesn't have other income from a business or YouTube. So the total income together was $1,002, $102,100. Then, if they had a self-employment deduction or other adjustments, it would reduce it, but this person did not. So their adjusted gross income is $102,100 minus the standard deduction. So their taxable income is $74,400. So at the end of line 15, if you were doing this by hand for some reason, that would go there. But this is what your tax act or your H&R block or whatever will have at line 15. So you can go to the instructions if you're doing it by hand for some reason. Or using our Python program, it says that the tax that we would owe would be $8,488. Right? And just if you don't know how to do this like quickly in your head, let's do that. 8,488 divided by 74,400 is 11.4%. So that is your basically how much you owe in percentage of taxes on a taxable income. If you remember, just for this fictional setting, I did 16% of my withholdings. So that's how much tax is paid just for this scenario. So you can already in your head know that this fictional person is going to get a refund. And so if this person had this Python program, let's say in March, and didn't expect any increases, then they can say, wow, I'm putting a lot of money towards federal taxes. Let me reduce my withholdings and let's get it closer to zero. Because that's really the goal, right? Is to not give too much money to the government, because you could be using that monthly to pay down taxes, or pay down credit cards, or save that money in the stock market. But anyways, so that is going to be, this person doesn't have child tax credit, but if they did, that would be even more of a refund. So total tax is $8,488, but since we did 16% of $100,000, we way overpaid in taxes, and we're going to get a $7,511 refund. So I haven't been in that position for a while because of my investments. I've always had to either get a very small refund or owe, and that's okay with me. I do prefer being plus or minus 500, and I'm even okay owing, because that means I got to keep the money longer than the government did. But that's the code. If you're really interested in this, then please consider subscribing, because I'm going to make an advanced one where you can choose between single and head of household, and you can input these yourself, so you're not manually coding this into the code, right? And so look forward to that. I've already created a 2024 one that I'm not going to show you because I have real life dollar values in there. And I've been able to estimate my 2024 taxes, which is really exciting. It's the first year I feel like I'm in control. So in March, I'm going to get a cost of living increase. And so I can put most of that pay raise, if you will, into my taxes and maybe, just maybe, get close to not owing anything and not getting any refund. And that will be the true mark of how awesome building my own digital assistant is. So again, please consider subscribing to my channel to watch all the digital assistant stuff I plan on creating in the future. And thanks for watching. Goodbye, world.